All right. What's going on, everybody? So, I decided to make a video to like go over a few things about using Robinhood. Robinhood isn't like the only platform that you can use. Like you have Webull, you have Charles Schwab, etc. But I always recommend Robinhood for beginners because it's the most user friendly. The other ones to me, like my favorite actually is Weeble, but I know it's harder to navigate. Um, some of the benefits from it though is you can actually paper trade on it. So basically what that is you can play with fake money. You can go on there and set an amount of fake money and actually trade with that fake money to see how you would have done if you were using real money. So basically that's all paper trading is. It's just you using digital money, fake money or whatever. So Webull has that. It also has better news sections to me. You know what I'm saying? Like you can get like I know people you leave their comments, their ideas as well, like other users. So it's just a lot more, right? But in regards to buying a stock or looking at the options, more so the option chains, that's more difficult, you know what I'm saying, to navigate. But just like anything else, I mean, if you play with it enough, you'll learn it. I actually trade on a few different platforms for different reasons, but we could get into that later. Right now, I'm just going to show y'all how to operate Robinhood for the most part, right? So right here, all right, this is Robinhood on a laptop, right? It'll look similar on your phone. Um, the first thing you should do, of course, is download it. You have to create an account, to sign up for it. And while creating that account is legit, so you're gonna have to give up some personal information. You know what I'm saying? You have to give up your name, your social security number, and all that good stuff because they have to verify your identity. You know what I'm saying? To comply with like financial regulations and whatnot. So that's going to be a part of it. So don't get freaked out when they ask you for that personal information. You're going to need it, you know what I'm saying? Because you actually um, you know, have taxes and stuff associated with trading. You feel me? So you're going to need all of that good stuff. Um, once you create your account, of course you have to fund it, have to put money in your account. So you're going to have to link a bank account. um, that could be whatever bank account you feel comfortable with linking, but you have to put a bank account there. The bank account that you have on here is the one that your money is going to come out of, and if you sell your stock and want to cash out and transfer your money back into the bank account, it's going to go back there. Um, some banks, like Wells Fargo, have like an instant deposit, right? Of course, they charge you a little fee for it, but let's say you sell your stock and you have 500 withdrawable funds there, and you need to take care of something. So you like, man, I need 300 of that right now. You can actually transfer that 300 whenever you want to, 24 hours a day, as long as it's available to be withdrawn. So you can, like, right now you can transfer that $300 to your bank account right now if it qualifies for instant. I know Wells Fargo does it. I have a credit union account and it isn't instant like that, not with the withdrawals, but Wells Fargo is. um with the deposits, I believe if you sign up for Robinhood Gold, like if it depending on how much you deposit, they will actually give you instant access to that. So just like the instant deposit if you withdraw, if I wanted to put 500 in my account right now, I could put that in there. It'll automatically go. I could even before the funds settle, before it transfers. Robinhood will give me the 500 like right now. You know what I mean? And I can start using it immediately. So that's dope too. In comparison to Webull, if you deposit on their platform, it's gonna take at least 2 or 3 days for that money to hit, and that money has to settle. You know what I mean? So that's some of the differences between it. But okay, this is pretty much. Let me see if I can make it full screen. Full screen. Okay, here we go. Okay, so this is pretty much the home page for uh, Robinhood, right? Um, I'm using an old account that I deactivated a while ago just to go through this with you. This is the home screen. Of course, this is the search bar. So you could pretty much put in, any stock or ETF or whatever that you're looking for. So if you're looking for Apple, right? It's you can tap Apple in there, type Apple in there, and it'll pull up right here. Or you could just type the actual ticker symbol. That's what that is. So those abbreviations that you see for stock, like AT&T is T, right? These are what you consider ticker symbols. So you hear that word, that's what this is, ticker symbols. Um, you could put that in there. Yeah, we'll go to AT&T, click on it, and it'll show you AT&T, right? Um, if I wanted to buy shares of AT&T, right? Then you could go like right here, right? Buy in. Um, Robinhood has this thing where you could buy fractional shares, right? So let's say that okay, AT&T is $19.08 right now. Let's say you only have $10 that you want to invest in AT&T. Well, you could do that, right? You don't need the whole $19.08 to actually invest in AT&T. You can invest in $10 worth of AT&T. So you could go here and put in $10, and instead of you getting a full share of a full because of a full share of this costs 1908. So because you're not spending 1908, you're not going to get a whole share. You would get 0.5241 shares of this stock if you invest $10 in it. So that's also another good thing about Robinhood as well, is that and I think some of the other platforms are leaning towards that now, but Robinhood was like the first that I know of that gave you the option to buy fractional shares, and it's kind of dope because some stock may cost $2,000 a share. Yeah, everybody don't have $2,000, you know what I'm saying, to spend on one share. So, but you can believe in that company and think that it's a good company. So let's say you have $100. You can actually put $100 into that company, even though it's $2,000 for one share. You still can invest in it, right? So that's one way to do it, and that's why you see dollars right here. Then the other way, of course, is the traditional way where you actually buy shares based on the price that the stock is currently, right? So if you could be like, okay, I want 10 shares of AT&T, you can see what that's going to cost you. And as you can see right now, 10 shares at 1908 will run you 190, $190.80. You know what I'm saying? So when you hit that, like if you wanted those 10, I'm not sure they're gonna let me like go through the whole process because I don't have any buying power here. Like I said, this is an account that's deactivated, but I hit it. Oh yeah, see, they want me to make a deposit, right? So, but if if I wanted to buy that, I would hit review. Another screen will come up. Boom, hit buy, and I bought it. You know what I'm saying? Um, so I usually leave mine on buy order, right? And let me see if they could, sometimes they give you explanation for it, but I usually leave mine on buy order. because if I'm trying to hop into a stock, right? I want to get it. Like I already know my price targets. I already know my entries, right? So I want my order to fill immediately, right? Um, that's why I go with buy order because it's immediate. It's gonna fill it at whatever the market price is at that point. That's why when you see this, it's at 1908, and as you see now, it's 1908. That's what I'm buying it at right now, right? I want my shares. I want to make sure I enter that trade right there, right? If you go to limit order, right? Let's say that you see it and you thinking to yourself, well, AT&T might drop down to $19 even, and that's what I want to pay for it. I don't want to pay 1908 for it. Then you could put that 19 in here, right? Put same thing, how many shares you want, and that order will not get filled, right, until that stock hits $19. So the the risk you take with putting in limit orders like that, if it doesn't go back down to $19, then your order will not fill. You won't get in the stock. So let's say that it goes from $19.08 up to $20, your order not gonna fill, right? If it's only gonna field if it goes back down to the price that you set right there. So it would have to dip from 1908 to $19, then your order will fill, right? So that's what that is. If you just have you have a price in your mind where you just like, oh, look, I'm not paying that much for it, but I will pay this, then whatever this is, you would put it right here, right? For your limit order. Okay. So that's let's see, go down. All right, stop loss, right? Um with stop losses, right? And all of this is on the same thing, right? So with stop losses, a stop loss is basically a way to manage your risk, right? Um let's say that okay, you buy this at $19, right? Well, let's just use what's there. You buy this at $19.08, okay? And you're only willing to risk $1 per share, right? Because let's say you bought 10 shares of it, 10 shares of it at 1908 is $190, right? And 80 cents. So um let's say that you don't want to lose more than $1, per share. Okay. Then you would set your stop price for it to be $1 under what you actually bought it for. And then you put how many shares you want, where you want your stop loss to be, which in this case, if you did that, right, you will only be risking $10. So let's say you said to yourself, hey, all I'm willing to risk is $10 on that. If I lose any more than $10, I'm out of it. I'm getting up out of there. Then you would go set this to the price that you would want your stop to be, right? Where you tap out, and this is important, right? The expiration. As you can see, it says 4 p.m. Monday because that's the Monday is the next trading day, right? So on Monday, if you set the stop loss, right, it would only be good until the market close, right? The market opens at 9:30 a.m. Eastern time and closes at 4 p.m. right Eastern time. So this stop would only be good for Monday if you keep these settings. So when once Tuesday come, you have no stop loss there, right? So if that's how you feel, you don't want it to go below 1808, right? You go here and you do good until canceled. So that way you don't have to worry about renewing this, looking back at this stop loss until October the 18th because it's good up to 90 days, right? So you put this here, review it, put that order in, you don't have to worry about it no more. So if AT&T decides to take a plunge on Monday or Tuesday or whatever after you set this stop, now I don't care how much it goes down, you're not going to lose more than $10, right? So that's how you manage your risk. That's one of the ways to manage your risk, right? Especially for people who work every day, who don't have time to like keep up with everything. This is like one of the best ways to like automate the process, like I don't have all day to look at stock either. But this is one of the ways I protect myself. You know what I'm saying? So it'll sell automatically for you. You don't have to watch it, and you don't have to worry about risking no more than what you're willing to risk, because that's the first rule of investing, is to not risk what you cannot afford to lose. Nothing is guaranteed about this game. Like, for those of the people, those of you who actually have done it, you know that. Like, a good stock today could be a bad stock tomorrow, and vice versa. It could be bad today and do well tomorrow. That's just how it goes, right? There are no guarantees, so protect yourself. This is one of the ways to do it, right? So you have that. Um, okay. The trailing stop, right? Okay. I like this one too, right? But I use this one once I'm up, right? So let's say that this stock, AT&T, we get in it right now. We in it at 1908. Okay. Um I will I will let's say that I'm up, we are up 20% on this stock. Like we have 20% profit right now on AT&T. Um you have to decide like how much of that 20% you want to risk giving back, right? So if I'm up 20%, and I'm not sure if the stock is going to continue to go up, or if it's gonna, hit some sort of resistance and bounce back down. But I don't want to miss out on an opportunity to make more profit off of it. I'm going with a trailing stop, right? And I might set my trailing stop for 15. If I'm up 20%, I might set it for 15%, right? Right? 15%. And what that does is, um anytime that stock drops, and I'm just using this as a hypothetical, right? I probably, if I'm up 20%, I'll probably risk 5%, honestly. So I'll go with the real example. I'm not risking 15% of my whole 20, right? So okay, if I put 5% here, right? It's gonna automatically sell anytime that stock drops 5% from its highest point, right? That's why it's called a trailing stop. So if it's gonna follow the price up. So if this stock goes from 1908, right, to 2508, right? It's good. This trailing stop is not going to trigger my sale until it dropped 5% from the 2508, right? It's going to keep adjusting every time the stock goes up. And what that does is it ensures that you lock in your profits, right? So if when I tell y'all that, hey man, it's, you know I'm up 60%. Now this is on stock, right? When I'm up 60%, I might set a 15% trailing stop on it, and that just means that I'm willing to risk 15% of whatever I'm making, whatever my return is at that point. And when I can turn away from my computer at that point, like I don't even have to look anymore, because if at any time that stock drops 15%, it's going to automatically trigger my sale from its highest point. That's going to lock my profits in. So this is another way to automate profit taking, right? So same thing. expire. Um, you could do for one day, keep your eye on that, or you could do good till cancel. You know, you might adjust this as you go on. If you're up 100% on something, you might be willing to risk more than 15% of it. At that point, you might say, "Hey, I'm willing to risk 30% because even if it dropped 30% from the 100, I still profited 70." And you might feel the need to give it more time, to grow. You know what I'm saying? So that's where the trailing stop comes in. So you have your stop loss, you have your trailing stop, right? Once it start going up and running, put a trailing stop on it. You know what I'm saying? Once you get in it initially, put your stop loss on it. And those are a few ways that you can actually manage your risk to not to because before you invest in the stock, um, you always want to have a number in mind that you're willing to risk or to lose, right? Before you say, "Hey, I'm done with it." Like think about that before you even invest. So if you want to invest 100 into a stock, ask yourself how much of that 100 you're willing to lose, right? Because nothing is guaranteed. Nothing is guaranteed. You know what I'm saying? So you might say, "Hey, I'm only willing to risk 20% of every $100 I invest." So now set your stop loss to sell once your stock drops below $80 if you only want to risk 20% of your 100, right? So that means you're only willing to risk $20. And once it get beyond that point, if it hits your stop, be okay with it. Live with it, be okay with that. The stock might continue to run up, after you get out of it, but just don't worry about it. It's better to be safe than sorry. Like just be okay with whatever move you make. You know what I'm saying? Because I don't care if it turned out good after you got out of it or not. It could have been just as much you took just as much of a chance of it being bad, like if you had stayed in it. So you would drive yourself crazy, like looking at what could have been, right? If you jump out of something. So but that right here, what I'm telling y'all now, like, is very, 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 very important. Like it is not all about profit taking. Like it's about managing your risk too, because you're not gonna win every trade. Like you're not gonna win every time you invest in something. If somebody tell you that they can guarantee that you're gonna win 100% of the time, I guarantee you they're lying to you 100% of the time. Because if it was that easy, everybody would be rich. That is not how this works, right? You will lose. The objective is to win more than you lose, right? And to cover your losses, man, and cap them, right? Don't watch your whole account just go down in flames. But I'm gonna make more videos on risk management and stuff to go like more in depth on how to go about that. I know I just went off on some whole other stuff, but look, that's how important that is though, like to me, like managing your risk. That's how important that is. So, okay. We took care of that. As you all can see right here, right? Um, that's for buying options. Okay. And options are contracts. I'm gonna make a separate video to kind of like go over the whole option thing. But just when it comes to Robinhood, you have to get approved for option trading. Okay, like they don't just give that to you. You have to actually um, sign up to get approval for that. Okay, so let's see if I can. All right, let's see if it'll show you. Okay. See, like this. And this, see, once again, this is one of those things that I like about Robinhood. They explain everything to you, right? So even with option trading, you have to sign up for it. Okay. And they ask you questions, and based on how you answer those questions, that will determine if they approve you for it. Okay. So I'll just say that. And yeah. This is how I answered it to get my approval. Not saying that you should copy this, but this what got me my approval, right? Um, so then you get approved for option trading, right? And you need that. Like if you're gonna be out trading options. Um they won't get me approved because I'm deactivated, right, on here. But um yeah, that is you definitely want to sign up for option trading if especially if you are a part of global stock alerts, like then you need option trading because we do that a lot, right? Um Option trading is a lot more risky, right? But in this game, it's high risk, high reward, high risk, higher losses, right? So um you definitely want to sign up for option trading. Like look more into that, you know, and we'll even go over that more. But I options deserve a whole video of their own. You know what I'm saying? Like that's deep, you know what I'm saying? But I just wanted to like go over, some of the basics about how to just buy a stock because I know some people don't know how to do that, right? So let's see. Back to the homepage. Okay. All right. So we're on the homepage. Um Also you have the capability to create watch lists, right? So do that. Take advantage of that. So like right here, you hit the plus sign. You can name it, watch list, weekly list, right? And you can create a list, right? All right, you got AT&T. Okay. All right. We might can go to let me see. I want to try something different. I want to see something. So weekly list, because I'm usually not on my laptop doing this. Right. Price alerts. Oh well. Before I get to the watch list, since I clicked on that, let me mention something about this, right? So, um, sometimes I send out watch lists, right? And I have if a stock goes above um, $18.50. I did do an alert on AT&T. I can't remember what the alert was right off the top of my head. But let me see. Hold on, give me 1 second. Let me see if I can find it. Let's see. AT&T. 1 second. This is a way for people that work, don't have time to watch this stuff all day. This is another way for you to automate the process, right? Where you can get notifications. Um, let's see, AT&T. Okay. All right. So with AT&T. Okay. So I mentioned that if it went over $18.84, um, then I would potentially look at an entry point, um, at that point, right? If it went over 1884, right? Which it did. Okay. Um, so let's say that you saw that, right? Like you were looking for a specific amount that you were waiting for it to go to trigger, an entry, right? For an entry, whether it's for to buy the stock or an entry for you to buy an option play, right? You would hit that. you create a price alert. It said price moves above. So if I said that if it go above 1884, then I would look to enter a trade or buy an option. Then you just put 1884 here because it said price above it, right? And it sets an alert. So now, anytime that price goes above that, I would get a notification sent straight to my phone. And with that, it would say, "Hey, AT&T just moved above 1884." So that lets me know right then, "Hey, I need to go look at it now." Right? Whether I'm looking to buy it or looking to just keep an eye on it to see if it's continuing to go up, whatever the case may be, that tells me I need to go look. And that keeps me from having to keep opening my phone or my laptop or tablet to keep looking to see if it's going to hit that price. You know what I'm saying? So this is another way to do it because I know that a lot of people that I talk to always talking about how they don't have the time for it, right? Well, this is what helps you with that. Like this is how I'm a busy person myself, but this is one of the things another one of the things that help me, you know. So you can add as many alerts as you want. So price move above, below. So this also lets me know when a stock is tanking or when it has hit resistance. Like so if I put, hey man, I would look to, potentially get out of this if it went below 1850, then I'll put price below 1850. That way when that happens, I get a notification sent straight to my phone, right? So this is another thing um to do that could help you. Because like I said, most people, man, do not have all time. I mean, have time to just sit back and look at the stock all day. You know, I know I don't. Especially if you work, you have a 9 to 5. It's it's not gonna happen. Um, but yeah, this is basically the chart. So it shows you what happened for today, because that's what the 1D is for today, what it did during the day and after hours, after the market closed. To show you what it has done over the week, right? The whole week, month, 3 month, so forth and so on. Year to day, 1 year, 5 year. And this is this stretches all the way back to year 2000. Like this the whole chart, right? Um, okay. Tells you about the company, right? Find information about them there. Um, this is like financial data, some of the financial data, about the company. This company actually pays dividends. So you see that there. This is the average volume. The average volume represents how many trades this company actually it has on any given day. Um, and trades consist of buying and selling, right? So it's not one or the other. Like this doesn't say, hey, that's somebody. There were 30 million buy orders or 30 million sell orders. This is both combined. Like this is just how much trading has taken place. Okay, that on average, this is what it averages on a daily basis, right? This right, like today, this is the weekend, but on Friday, that's how much it was traded on Friday. It was 29, right? Um, this is where it opened at. The price opened at when the market opened at 9:30. It was at 1912. The lowest it dipped on Friday was 1898. The highest it went on Friday was 1924. Right, and if you look back at, let me show you. This is how this works. Right, on Mm, we'll go through. Remember those numbers, right? The high for Friday was 1924. The opening price was 1912, and the low was 1898. And I said enter at 1884, right? That I would possibly look at that, right? Um, okay, so 1924. Alright. Oh, bear with me here. Okay. All right. So 1980, 1924, right? What you to look. So I made this post on 710. Today is 720. Okay. Um, keep an eye on it. Uh, they started the week at 1884 and the month at 1924. Right? Trying to see if it would go up. Okay. At that point, it was below where the week was. Right. Um, So that's why I had that. I'm like, yo, if it go back up to this point and it break through it, then it's probably gonna reach for the price that it was at, um, to start the month, right? Now look at this. The high on Friday was 1924, right? And like I said, Friday, yesterday was the 19th. Okay. How could I know on the 10th that it would reach back for 1924, right? And that's based on technical stuff, right? Technical analysis. And I'm gonna do more videos on that too, man. Like this is one of many. But I just wanted to point that out, like to show you like how this works, right? Um, so okay, that was the high, which was the monthly. Um, and the 52-week high, which is the last that's the highest it's been in the last year. It's actually nine. It hit 9 cent under that. It's reaching for that 1933. So that can actually be a target, right? The 1933. And once it actually reached that 1933, one or two things are gonna happen. Either it's gonna reject it and bounce back down from it, or it's gonna break through it and create a new high. But that's what that 52-week high. I'm kind of like mixing technical stuff in here right now, man. Pardon me. I can't help myself. But the that's what that is. And this is the lowest it's been in the last year. Right. Okay. Go down here, you see news, the latest news about you know, the stock, the actual company. It's good to scroll through those to see what you see. See if anything stand out to you. The news pretty much it tells you look at the news to see if people are bullish or bearish about the company. If they're bullish about a company, then that basically means that they think that the sentiment is that that stock is going to go up. If the sentiment is bearish, that means that the analysts and overall people are thinking that stock is going to go down in the future, because we're talking about the future here, right? So Robinhood also has these generated lists that they put together themselves. So this is the 100 most popular stock, 24-hour market, telecom, Texas, upcoming earnings, right? You can look through all of those. Let's see. A lot of this stuff down here is just technical. Like if you want to see what analysts feel about a stock, you can look here if you value their opinions just to see. Like I keep up with analysts Because if an analyst upgrades a stock, like takes it from a sell to takes it from this to a buy, sometimes depending on what analyst does that, man, that stock will shoot up. So you can sometimes ride the momentum of that. And it also works the other way around too. Like if a stock gets downgraded, then it could that could be enough to make it go down. But nothing's guaranteed. So a stock could get downgraded and go up, and upgraded and go down. Like it happens that way. But when you see that an analyst has upgraded or downgraded a stock, you should go see how that stock is actually reacting to the news. This just shows the previous earnings, whether or not they beat earnings or they missed them. That works the same as what I just described to you about the analyst. A stock could beat earnings, meaning that it beat expectations. They expected the company to make $500 profit, but the company ended up making $2,000 profit, and it beat expectations, and the stock go down, right? Um, and then you can have it where it missed. They just lost $2 million. They just lost $2 million, and um, the stock goes up. Like it's crazy like that. But the point is, regardless of that, right? When you see an earnings report come out, when you get the news that they have just reported, go take a look to see how that stock is reacting. Because if that stock is going up, you might be able to ride coattails, right? If it's going down, you might be able to take advantage of that by buying a put option. That's what options come in at. Well, you can get money whether stock is going up or down. So that's what option trading comes in at, right? So earnings operate the same way. Down here, they show you that okay, people who typically invest in AT&T also invest in these companies as well. That doesn't mean that you should just go buy everything you see at the bottom here, but at least these are breadcrumbs. So let's say that the only stock you've ever read about was AT&T up until this point. If you just scroll down to the bottom, they just gave you six more that you can look into, right? To see what they're doing now. Like so it's just like following the breadcrumbs, right? So now you just found six more companies that you weren't thinking about that now they just put on your radar that you can look into as well. And then once you click on one of these, it's the same information, right? Same thing, right? Show you that. You go down here to the bottom, and guess what? They give you, of course, AT&T is in there. They give you five more other companies that you can look into that you probably had never heard of, and read up on them to see what they're looking like. Like, what products do they have coming out? Like, what do the analysts think about them? Are they on sale right now? Like, are they a good company? Do they make money? And maybe they turn out to be a good investment. Maybe you find a sleeper that nobody else is really looking at. But yeah, so Robinhood is good, man. That's why I always recommend Robinhood for beginners. Um, it's user friendly, as you can see. Um, so yeah, and that's pretty much it in a nutshell. Um, like I said, I will have more videos coming, but if anybody has any questions about anything that I've gone over right now, and you want me to either make another video about it or you know, message you or talk to you about it, just shoot me an email or DM me, and we'll figure out how to get that done because this stuff really isn't rocket science. Like people, uh, like I taught myself, right, and during the process of trying to learn it, what I learned was that people try to make this stuff seem like it's so hard. And I don't know if they do that because they want to make other people feel like they're so smart that they figure this out, like they can or something. Man, it's not that. Really, the main thing about this is consistency. And what you do on your own. Like I've been talking for 45 minutes about what's going on Robinhood. Man, you take from that what you take from it, but yo, you go study on your own. Try to even with what I said, still try to figure out stuff on your own because it's so much to this. Like I will say it's not rocket science, but it's a lot of stuff. Like nobody knows everything about this stuff, man. Like it's a lot. It's a lot. It's a lot. It's a lot. So you just follow the breadcrumbs, and the main thing I've learned that make you better with trading stock is consistency, man. Just keeping up with it. Making sure you keep your finger on the pulse of the market. Um, and study every chance you get. Even if you take 10 minutes per day to study, to read something, to listen to something. Do that every day that you can, and it'll start making sense to you. And I also think that just reading and not actually doing it is, man, that's not the way. Now it didn't work for me. You have to get in the game. Once you actually put some money in here, you really gonna start paying attention. So you can play with the fake money first before you risk your real money. You know what I mean? So if you have to download Webull to set up a paper account, do that, right? Do it if that's what you have to do. Like nothing's wrong with that, right? But I just wanted to go over Robinhood right now because to me it's the most user friendly once you start playing with your own money. But who knows? You might like Webull better after you practice with the paper trading. So set up both of them. Have two. Trade on both. Um, but yeah, so I think that's pretty much it. Um, yeah, like I said, if anybody have any questions or anything, man, just reach out to me. This is my first video, so bear with me, man, as I get used to like navigating this stuff. Um, but thank y'all for tuning in, and you know, I'll be back soon with another video. All right, later.